Super Microcomputers had failed to report their quarterly earnings back in September. And now the company is in danger of being delisted. This is a huge problem, but not just for that reason. The second problem here is they're a big customer of Nvidia, and Nvidia is a big customer of theirs. And we all know Nvidia has been the darling of the stock market for the last year and a half or 2 years. These companies are intertwined, and it's going to have an effect on Nvidia. So let's go take a look at how big a problem this could be for both companies. Now, guys, before we get into the details of the delisting, this is the company. Year to date, it's only down 3%. Why? Because it had a huge surge this year. And I'm glad you're watching our channel, because if you've been one of these hypesters, earlier this year, you'd have said this company can't miss because news follows the stock price and you loved it. And then you'd seen this happen. Guys, 2 auditors have quit this company. Ernst & Young was the most recent one saying, listen, we don't like these books, we're out. For that to happen, for one of the biggest accounting firms in the world to sit there and say, we're out after you guys are paying us lots of money, that's pretty bad. And the NASDAQ, in order to stay listed, has certain requirements they have to have. And they failed to meet any of these listing requirements, basically. Earnings were delayed because of the second audit firm quitting in the last 18 months. And this would be actually SMCI's second time being delisted. Now, before everybody gets worried, SMCI being delisted does not mean that they'll fail to exist. But they would be moved to the OTC, which is the over-the-counter market, which would make funding a lot harder to come by from these Wall Street blue chippers and make transactions in the stock more expensive. Back in 2018, they got delisted, and it took them 2 years to come back. Guys, it's harder to come back. And if they get delisted again, coming back a second time, I think would prove to be very challenging. But again, guys, we're trying to separate the news from the stock price. And this news could be exaggerated. We don't exactly know. The Department of Justice is currently investigating the company. And if you remember back in 2018, they were investigated and the SEC ended up fining them $20 million, which is a drop in the bucket. So as you can tell, guys, this company is used to being in hot water. And I ask you a question. If you were a private investor buying the whole company in full, would you want to be part of that? I'm not telling you whether to buy the company or not buy the company, but these are decisions you have to make because you have to be able to trust the people running the company. Now, guys, in the last week, look at this company. It's up 27%. Why? Because they've put a plan in place to try to stay on the NASDAQ before they get delisted. And here it is. This is the article from Barron's. They have appointed an independent auditor and submitted a plan with the NASDAQ to comply with their listing requirements. That auditor was BDO USA. BDO is a member firm of BDO International. Now, here it's not telling us exactly, but they're going to give their annual report for June 30th and their quarterly report for September 30th in order to get back and stay on the NASDAQ. And they also said their securities will remain listed pending NASDAQ's review of the plan, citing the exchange's rule. A person familiar with the matter told Barron's that it should take about 2 weeks for the NASDAQ to review what has been sent over. Now, the reason they've surged this week is they had an extension because November 16th was the actual 60-day deadline of when they were supposed to, when they received their letter from the NASDAQ to sit there and provide a response. It landed on a Saturday, so it gave them until yesterday. Ironically, yesterday was the 18th, and the stock was up big, and after hours today, it's up even higher. But again, it's still significantly lower. It hit a low this week of 17.25 back on November 15th. That's a big drop. So another big issue is when a company gets delisted, their access to capital is very difficult. Their largest funding source is Cathay Bank, and they've already changed their covenants on SMCI's debt. And they failed to meet these new covenants, they can call their debt. That's a huge problem for SMCI. Those are the issues these companies have. Because if SMCI then has a call on their debt, they got to come up with a big check. If they can't come up with a big check, they go into bankruptcy. At that point, what happens to people buying from SMCI? So guys, here's a timeline of events for SMCI. 2018, delisted for failing to file financial statements. Same year, Howard Hideshima, the CFO, left and was charged individually by the SEC. Okay, then fast forward to August of 2020, charged by the SEC for widespread accounting violations related to $200 million in improperly recognized revenues and underreporting expenses. Same month, $17.5 million fine from the SEC. Fast forward a few months, in November, they rehired the top execs that were involved with the accounting. So guys, before we even go further on the timeline, that's your number one problem. If it's not just a matter of, even though those people had nothing to do with it, you have to save the image of the company. And part of that is saying, guys, we're going to walk away from these people. Fast forward to April of 2024, a lawsuit from a former executive, Bob Luong, sues SMCI, claiming that even after the relisting in 2020, they continued to improperly report revenues. Then in August of 2024, the famous Hindenburg report, the short report, came out talking about all the accounting irregularities and all the problem. September of 2024, NASDAQ issues their delisting warning to SMCI, giving them a 60-day deadline, which would have been November 16th of this year, to file a compliance plan. Now, if the plan gets approved, this allows for a 180-day extension to file its annual reports. If the NASDAQ rejects the plan, MCI can then request a hearing, which gives them the 15-day delisting suspension period. Also in 2024, but November, Elon Musk then shifts a $6 billion order from SMCI to Dell for its XAI. Again in November 2024, SMCI's compliance plan buys it time. However, they still have overdue financials and they're not out of the woods. Barclays and other major brokers have refused to continue to cover the stock, adding to future uncertainty over the company's financials. Now, as of yesterday and today, it looks like the plan might be accepted, but it doesn't mean they're out of the woods yet. But the stock has surged from a low of $17 to $26 or $27 today because the plan at least allows them to save some time from delisting. Now, up to the partnership with Nvidia. Nvidia accounts for 20 to 25% of SMCI's revenue, which is about $2.3 to $3 billion. Now, I'm not trying to be a fudster, but this assumes SMCI's revenues are actually real. And I'm only saying that because to have two auditing firms quit, you have to ask questions like that. Now, SMCI accounts for 10% of NVIDIA's revenues, about $9.6 billion. NVIDIA buys their racks, and SMCI is buying their AI products. So what does SMCI do? Well, they make AI cooling racks for data centers. Basically, think about your laptop. When you run it for a while, the bottom gets hot. We've all felt that. In fact, for you guys out there, you're not supposed to put it on your lap because it might make you infertile. Now, data centers are no different when they're running and doing that much work. They will get hot very quickly, but SMCI makes the cooled racks so the data centers can be more efficient and perform better. Now, guys, here's what's interesting. They're selling for 10 times free cash flow for the last year. That's after falling 75%. Think about that for a second. That's after falling 75%. But again, all these numbers, you have to ask questions. Auditors quit twice. But the question becomes, why haven't people been fired? Why haven't the entire corporate entity been fired? These are the same people that led us and led people to believe that the numbers were what they were, led Ernst & Young to believe those things before Ernst & Young quit. These are questions you have to ask. Now let's evaluate NVIDIA as if they're losing SMCI. So as I said before, SMCI is about $10 billion of NVIDIA's revenue, okay? Now, NVIDIA's revenue of $10 billion, you apply a 76% gross margin, it's $7.6 billion basically of their bottom line. That's a big number, guys. When the company reported free cash flow of $47 billion in the last 12 months, that's 15% of their free cash flow. Now, does that mean the stock is overpriced because of that? I don't think so. And if you think SMCI is going to zero, the question becomes, well, then who's going to take up their place? If SMCI goes to zero, somebody else is going to probably have to do their business for them, which means they're probably still buying from NVIDIA anyhow. Now you have to remember, NVIDIA is quite the growth stock right now. Their current price to free cash flow is 76. 76 for a company that's worth $3.56 trillion. That's a big number. I asked the question of when it's the most valuable company in the world, basically, how do you get above average returns with that? We have to get above average growth rates. How do you get above average growth rates while paying a reasonable price for the company? For this kind of premium, 76 times free cash flow, what do you have to grow at in order to justify that? That's why we have the stock analyzer tool. But before we get into that, let's do these 8 pillars and look at this. Guys, this is a fabulous company. Fabulous. And guess what? These 2 metrics are useless. Why? It's our 5-year price of free cash flow. It's our 5-year earnings. Look at how much their free cash flow has grown in the last 5 years. It's 3x. Look how much their net income has grown in the last 5 years. Again, over 3x. So you can't sit here and say, oh, they're 237. That really, no, they are still expensive from a price to free cash flow metric. But remember, high return on invested capital. That deserves a premium. They're the clear leader on the AI front when it comes to data centers and things like that. Okay, chips, all that stuff. So you have to sit there and say, what's the right premium for NVIDIA? This is what makes investing so difficult. So what is the right price for NVIDIA? Let's pull up the stock analyzer tool. And guys, this is the tool we use because we have to marry the story with the numbers. This is the numbers part. It is possible to overpay for a good thing. It's possible to overpay for a great thing. The question is, what's overpaying? Well, that's why we have to make assumptions. We don't know the future. We have to make our assumptions. And I do the low, middle, and high assumptions for almost every company I do. So for revenue, I did 10, 20, and 30% revenue growth. Guys, 30% revenue growth is insane. Over a 10-year period, 30% revenue growth is 14 times revenue. Guys, they did $100 billion in revenue. That would take them to $1.4 trillion in revenue in the next 10 years. Is it possible? Of course it's possible. The question is it probable? That's the question you have to ask yourself. At 76% gross margins, at 45% bottom line margins, that's the question, 55%. So on the free cash flow and profit margin, I did 30, 40, and 50%. I have to assume the next 10 years, as these margins are so big, more and more people will enter that market and drive down those margins a little bit. So then we ask the question of what's the PE at the end of 10 years? I did 20, 25, and 30. It's easy to get sucked into a higher number because of how high the current PE and the current price of free cash flow is. I still think 20, 25, and 30 is high. Most likely I would do 18, 21, and 24. But I did my 9% desired return. I'm not trying to do anything with margin of safety here. I'm just sitting there saying, listen, to match the market, what's the intrinsic value, 9 or 10%? What's that going to give me? Now, guys, these tools and all the tools up here are used every single day by the thousands of people in our community, used every single day by me. And the reason being is you have to be able to marry the story with the numbers. Most times out there, people are just focused on the story, and the story is great. But I remind you of the internet. The internet 25 years ago was amazing. The story was incredible, and I would argue that the story got better than what we thought it was going to be back then. But yet we still saw thousands and thousands of internet companies go to zero. Why? Because we weren't marrying the story with the numbers. That was the big thing. So if you've watched our videos and gone to our website to join our community and to join our software, you might have noticed we have a waiting list there. Because today's software includes everything we offer with stocks, retirement, and real estate. But behind the scenes, we're making changes. That offer is going to go away very soon. Now, if you've been with us since the beginning, you remember that I built this software for myself. And I used to do videos with Excel sheets on there. And people would say, hey, how do I get that software? How do I get that Excel sheet? And I said, guys, it's an expensive data feed, but it sparked a great idea. Let's make it for everybody. So I built the software for myself and my team and everybody out there to help me make suitable investment decisions in stocks and real estate and make the right decisions for myself in retirement. But as we've grown, it's becoming less about me and more about how I can serve you better. This software community grew far faster and far bigger than I expected. But this is why we update our software so much, to give you exactly what you need. Now, the good news is these changes haven't been made yet. So if you join today, you'll get grandfathered in for life with all of these tools, and you'll be stuck in your pricing tier forever. This is the best deal we've ever offered, and I'm telling you this now because you still have time to sign up. As long as you join the Everything Money community before we make these changes, you can keep your plan after we've made these changes. So click on the link in the description below to get access to everything we have to offer, including our tools and the community, and I guarantee you, it'll be one of the best investing decisions you've made all year. So guys, we made our assumptions. What's the price for NVIDIA? Hit the Analyze button. Guys, we have a low price of 36, a high price of 385, a middle price of 125. So assuming the rosiest of rosy assumptions, it's a great deal right here. But the question becomes, when does any company provide the rosiest of rosy assumptions? SMCI being delisted or going out of business will not take NVIDIA down. It's only 10% of the revenue, and all I have to do is go to one of their other suppliers who does the same thing that SMCI does, like Dell, IBM, Lenovo, Hewlett-Packard, all these huge businesses that can pick up the slack. Guys, SMCI is a crooked, fraudulent company. And even if they're temporarily able to skirt this delisting in the short run, the chances that their company probably has decreased significantly. They have a history of improper conduct, and the likelihood of delisting is probably a lot higher than people want to make it out to be. The other part of this is they're losing business from Nvidia and now Elon. just reportedly shifted $6 billion of AI server orders from Supermicro to its rival at Dell. So even if they stick around, the reputational hit is massive. So guys, if you want to see the 18 stocks that I currently own and why, watch our next video. Thank you for your time.